I'm not a big fan of backward-looking indicators because it's like looking in the rearview mirror of a car. You know what you crashed into, but you still crashed.
Forex Morning Mayhem is a must-listen podcast for currency traders. Get a curated watch list, insightful market analysis, and crucial news updates, plus trading tips for all levels. But remember, it's educational, not investment advice. Scan the QR code in the description to join our free Trade Faction Slack channel for live trade calls. If you like the podcast, please follow and share. Let's get started. Good morning, everyone. It's Wednesday, April 16th, 2025. And you're listening to Forex Morning Mayhem. It's time for the daily market briefing. In today's headlines, China is open to trade talks if President Trump shows respect, reigns in his cabinet, and addresses concerns over Taiwan and sanctions. The White House is reviewing over 15 trade proposals, with some deals expected soon. European markets are subdued, but China's willingness to talk has provided some support. ASML and Nvidia shares fell sharply after disappointing results and export control concerns. The US dollar is weaker, bonds are steady on risk-off sentiment, oil prices have rebounded, base metals are down on a US minerals probe, and gold is above $3,300 per ounce. Key upcoming events include US retail sales, New Zealand CPI, a Bank of Canada policy update, central bank speeches, and major US earnings reports. Stay tuned for a currency market update with Bill and Dave up next. Thanks for listening to Forex Morning Mayhem. Don't forget to subscribe and leave us a review if you like the show.
Let's start with the currency pairs. Aussie, New Zealand, nothing going on. We are going to skip that. Aussie US dollar, we are in the zone, we have an uptrend, and we are waiting for a long sweet spot to form. Euro Canadian dollar hyperextended, so we will skip that. Pound Canadian dollar, nothing is synchronized here, so we're going to skip that. New Zealand US dollar, same thing, nothing going on. Singapore dollar chief overextended, so we will skip that. US Canadian dollar overextended, so we will skip that. And the US chief overextended, so we will skip that. So what was that? One setup. Okay.
Yep.
So we got a lot of extremes going on here. It's interesting.
Are you an active trader looking to elevate your trading skills? We invite you to join the Trade Faction, a community where you can witness trades called out live. To connect with fellow traders and gain real-time insights, simply click the link in the description or scan the QR code to join our free Slack channel. This is a great opportunity to enhance your trading strategies and stay ahead of the market. So what are you waiting for? Click that link or scan the QR code now and become part of the Trade Faction today.
Moving on to Indicator All-Stars. I thought today we would take a look at this one because I don't think we've had any indicators that are based on regressions. Have we?
I don't believe so.
Okay. So this is another big beluga one. Boy, that person needs to get a life. It is based on a linear regression. You take the current price and you have to tell it where to take it from. Usually people take it from the close. And you calculate standard deviations away from that price point, usually 2 standard deviations. Let me look at the settings here, what the default is. 1.5. We're
Okay.
using 1.5 standard deviations here. they're defining how far back they look. So the idea here is you pay attention to this line, really. That's the important one. And when the color changes, that is when you would change the direction of your trade. And then for the most current 100 bars, it's going to actually print the channel in which the price is painting. Step one, which way is this? What color is this line? If it's green, you want to go long. If it's red, you want to go short. Step two, how close is my price to one of the channels? Because there's a high likelihood that it's going to reverse and go in the other direction if that happens. Make sense?
Gotcha.
Okay, so here's the thing that you got to watch out for on this. This is what's called a backward-looking indicator. So you'll see as I run the DVR here, if I actually went in short right now, okay, you see right there, I lost money because by the time I know it's flipping, I should have been out of it. So I'm not a big fan of backward-looking indicators because it's like looking in the rearview mirror of a car. You know what you crashed into, but you still crashed.
Yeah, hindsight's 2020.
Exactly. That's what I think about this. Well, how about you, Dave? What do you think?
From a design standpoint, looks real easy.
Hmm.
It's easy on the eyes, and I can look at that, especially if you're using lines. If you use candles, a lot of these indicators really are troublesome. To me, this is nothing more than what's the trend? I just kind of look at this and say, okay, I can see this is going down. I know it's going down.
Right. The way you can look at it is a lot of people will put multiple indicators together to get what they call confluence of an indication. So if the trend is going in the right direction and your oscillator is doing something, what your other indicator are all doing, so if you get all three planets to line up, then that's supposedly a good trade.
Give me something I can target.
Right.